Okay, so today we are going to learn about account payable. It is one of the important part of SAP. Okay, so account payable means all the credit purchase from the vendor is known as a account payable. Okay, so account payable is all the credit purchases. Okay, from the vendor. Account payable shortcut is also known as AP. AP we say, okay. So AP is current liability. Okay. Let me put in this way. AP is a balance sheet current liability. Okay. So whatever purchases your our company is doing on a credit basis, that is your current liability. It comes under the balance sheet. Okay. Account payable sub ledger. Okay. What is called sub ledger? It means that we don't do the posting directly in the GL. Okay, whenever we say any area is a sub ledger, it means that we do the posting in the sub ledger, then posting comes in the main ledger. Okay, or we do the posting in some ledger, then posting flows in the GL. Okay, so how posting flows? Okay, listen very carefully.
Yeah.
Account payable, let me give you an example. So you want to purchase anything on credit basis, first you need to have the vendor master. You have to create the vendor master. Then while creating the vendor master, in the vendor master you have to give the GL. Okay, you have to give the GL. The GL which you are entering in the vendor master is known as a reconciliation GL. Okay, that is known as reconciliation GL. So whenever you do the posting in the vendor master is also known as a sub ledger, is also known as a sub ledger. When you post in the vendor master, automatically journal entry will also hit to the your reconciliation GL. Okay, but you cannot post directly in the reconciliation GL. You should always post in the vendor master. From the vendor master, accounting entry hit to the reconciliation GL. Is it clear, Aruna and Pallam?
Yes,
Yes, sir.
Okay,
yes, Hari.
so
Yes.
let's say our Apple is purchasing from PayPal. Sorry, let's say they are purchasing from, let's say, DMart. They created one vendor as a DMart. They are purchasing something from Reliance. They are purchasing from Intel. So all these are the vendors. Okay, so you have to create the vendor master. While creating the vendor master, inside this vendor master, you have to give the reconciliation GL. Okay, you have to give the reconciliation GL. Inside this vendor also you have to give the reconciliation GL. Inside this also you have to give the reconciliation GL. Then whenever you do the posting in this sub ledger, so this is known as a sub ledger. Okay, the vendors are known as a sub ledger, and this your reconciliation GL is your main ledger or general ledger, is your general ledger. Okay, so whenever you make any posting in this sub ledger or in the vendor, it will automatically hit to the reconciliation GL, main GL it will hit. Okay, why? Because in the vendor master in the sub ledger you have already entered the reconciliation GL. Okay, so Whenever you combine the balances of your sub ledger, the balances of your GL should also match. Okay, individual vendor balances should match with your GL balances. Okay, that is the reconciliation. Okay, fine. Is it clear, right? Sub ledger and main ledger concept.
Yes, sir.
And
Yes.
you cannot post directly into the reconciliation GL. You should always post to the sub ledger, that is in the vendor label. Okay,
Yeah.
fine. And in the your financial statement, in your financial statement, that is, as I said, that account payable is your balance sheet current liabilities. So here in balance sheet, we don't show this sub ledger. Okay, we don't show this demand, Reliance, Intel, we don't show. Reason being, there will be thousands of vendors, so thousands of vendor we cannot show in the balance sheet. What we show? We show this GL. So whatever GL balances is there, that balances goes into the balance sheet. Is it clear?
Yes, sir.
Okay, okay, Aruna,
Yes,
fine na?
Hari.
So
Yeah.
reconciliation GL balances goes in the balance sheet,
Yes.
not this sub ledger individual records goes in the balance sheet. Is it clear?
Yes.
So whenever you prepare any financial statement, you always show the general ledger balances, not sub ledger balances. But you have to also make sure during the month end, whatever sub ledger balances are there matching with the general ledger balances. Is it clear?
Yes, sir.
Is it clear, Arna?
Yes, Hari. Yes.
Okay. Now, so sub this account payable is very biggest, it is very big area. It includes lot of things. So let us see what are the areas are important for the functional consultant. Okay. And you to also need to know account payable will have impact on cash management module for the liquidity planning. Okay, so as you know that if you purchase anything on credit basis, it means that you are also committing to make the payment in the future. So each your purchases will have impact on the cash management area. Okay, cash management, it comes under the FSCM module. So it will have the impact in the liquidity planning. So for each your purchases, it will trigger alarm to the cash management guy that he has to arrange the money for the payment. That is known as a cash management or liquidity planning. Okay. Now, now in SAP, there are two kind of purchases. Okay. There are two kind of purchases. One purchase is known as a material management side purchases. Material management are also known as PO purchases, PO based purchase. Another purchase is known as a
Service.
FI. No problem, I will tell you. FI side purchases, also known as a non-PO based invoices, non-PO based purchases. Okay. So we have one module called material management. Okay. This is separate module, like we have the finance module. Okay, so any purchases you are doing from material management, also known as a PO based purchases, because if you want to purchase from material management side, you have to create the PO means you have to create the purchase order. I'll tell you what is called purchase order. If any purchases you are making ad hoc basis, ad hoc, all of a sudden if you want to purchase anything, then you can purchase from the FI side. Okay, and FI side, if you are purchasing, it is known as a non-PO based purchased. Okay, let me put in little more simple way. If you are purchasing from material management PO based means, it means that you have already received the quotation from the vendor, you have analyzed the quotation, you have chosen the right vendor, you have made the contract with the vendor about the price, delivery date, discount, and all the thing. You have already had the very detailed discussion with the vendor and made the agreement for the purchase. Okay, so PO document contains all the terms and condition of your purchase. Okay, and so here in the PO side, uh, comes PO is details of terms and condition of purchasing activities. Okay, so PO contains every detail of your purchases. Okay, how many quantity you are going to purchase, at what rate you are going to purchase, what discount you are going to get. Okay, on which date delivery should happen. Okay, in which currency you are going to purchase, everything is already agreed with the vendor. That is the reason you have created the purchase order. Okay, and in the side, if you are purchasing, then you can also record quantity. So how much quantity you are purchasing, at what rate you are purchasing. So if you want to record the quantity, you also want to record the rate. Okay, then you have to purchase from the material management side, or PO based purchases you have to do. Age opposite, in the FI side, generally you go for ad hoc purchase. You go for ad hoc purchase. Ad hoc purchase means all of sudden also you can purchase from the vendor. All of sudden you can purchase from the vendor. Okay, so it is non-PO based. You have not received the quotation, you have not discussed, there is no any legal document, there is no any formal document that this is the quantity I'll be purchasing from the vendor, at this rate I will be purchasing the vendor. This is completely ad hoc based purchase. Okay, it is ad hoc based purchased. And if you are purchasing anything from finance side, then you cannot record the quantity. Quantity recording is not possible. Quantity recording not possible during accounting entry. Okay, when you are posting the accounting entry of your purchases from the finance side, you cannot enter the quantity, that this many quantity I have purchased. But if you purchase from material management side, during the accounting time, during the accounting journal entry, you can record the quantity, you can record the quantity, and you can record the rate also. Okay, it is possible in the material management side. And in another thing, in the finance side, if you are purchasing, then before posting the invoice, okay, before finalizing the GL, in which GL you are going to post, or in which cost center you are going to post, okay, you should take the approval. Generally in the non-PO based invoices or FI set purchases, we always go for approval also. We don't post, we got the invoice from the vendor, we don't immediately enter the accounting entry in the SAP. We take the approval. We take the approval for the cost center, in which cost center we have to book. Okay, the amount which you have got, that you have to take the approval from the respective. Okay, there will be delegation of authority will be there. Okay, approval matrix will be already built. You will have the details, user will have the details, and before posting the vendor invoice into the SAP, they must take the approval. That is generally we every company follow for non-PO based invoice. So uh, approval approval from managers are required to post FI invoices, FI vendor invoices. Let me put in this way. But in the PO side, it is not required. If you're purchasing from the material management side, during the invoice posting time, it is not required. Why it is not required? Because in PO itself, already every discussion between your managers, your vendors, your finance chief, everybody has already agreed. They have already discussed and everything already approved in the PO time itself. Purchase order creation time itself, everything is approved. So during the invoice posting time, during approval is not required for vendor invoice posting. Vendor invoice posting. Okay. So you have to know these are the basic business process. Any doubt up to here? Up to here, any doubt?
No, sir.
No,
No, right?
Yes.
no,
Okay. So these are the basic purchases you have in the SAP. One purchase you have from the FI side, okay, that is known as a non-PO based purchases. Another you have from MM side, that is known as a PO based purchases. Just you remember that in PO based purchases, your company people and vendor, they have already discussed everything and they have created the PO. PO entails every details, okay. But in the FI side, generally you will not have any legal or formal any kind of document. It is generally ad hoc based purchased, okay, and quantity and rate recording is not possible in FI side. If you have such a requirement where you want to also record in SAP how many quantity I am purchasing, that also should be recorded in the system so that tomorrow I can check how many quantity is available for this material, at what rate I have purchased, the rate I want to see, at what rate I have purchased. If you want all this detail to be stored in SAP, then you have to purchase from the material management side or PO based purchase you have to do. In FI based, only your amount it will show. It will not show the quantity. So quantity rate is equal to your amount. It will show in the into material management side. Here, no quantity and rate, directly amount. Okay, 10 quantity you purchase at 50 rupees. So 500 it will show directly amount. It will not show quantity and rate. But in if you purchase from the material management side, then you can see the quantity also, you can see the rate also, you can see the amount also. Okay. Okay, once you are clear with this one, then next important thing is known as a something called, see, these are the purchase directly in the SAP. Sometime what happens, purchase happens in the third party tool, okay, but accounting entry only gets posted in the SAP, okay. Sometime they do the purchases in the third party tool, okay, but accounting entry get posted in the SAP only, okay, in SAP only, okay. So third party interfaces, as a consultant you should know, that is, let's say Ariba, okay, you do the invoice booking in the Ariba. Ariba is a uh, Ariba is a another SAP tool. These days, rather than telling third party interfaces, we are telling friends of SAP, okay. This word is very famous, friends of SAP. So we don't tell third party, they are our SAP brother and sister. So we say friends of SAP. This word is very famous these days. Friends of SAP means all the third party interfaces which are directly indirectly connected with the SAP. Okay, so sometime what happen, the purchases you do from the third party system also, and that data gets flowed into the SAP. So as a FICO consultant, you should also know the this interface like Ariba, third party tool called Concur. Let me write Concur. So these are the friends of SAP in which you do the invoice booking, okay, and accounting it get float into the SAP. Is it clear, Aruna? Aruna and Pallav, is it clear?
Yes,
This part,
yes, sir.
Aruna,
Yes.
Pallav, is it clear?
Yes.
Yes,
Clear, na? No doubt, right?
yes, sir.
Aruna, no doubt, right?
No hurry.
Then another very important point in account payable you have to learn is terms of payment. Okay, terms of payment is also known as a payment term. So this terms of payment will basically talks about two things. It will talk about the due date and it will talk about the cash discount. So it deals with cash discount, or let's say discount and due date. Okay, so whenever you are purchasing from the vendor, so what is the discount you'll get if you make the early payment, and if you are purchasing today, then when is the due date to make the payment. So you need to also understand about the terms of payment. Okay, it should also understand about the terms of payment. Then next very important is also known as a advance payment. Okay, advance payment you have to know. So advance payment is also known as a down payment. Okay, advance payment is also known as a down payment. So if you are making any advance payment to the vendor before the purchasing, it is known as a advance payment or down payment. In SAP, we also say it as a special transaction, okay, or a special GL transactions we say. So down payment process also is very important. Okay, so let me write here advance paid to vendor before purchase. Okay, now up to here it is clear, right?
Yes, sir.
Aruna?
Yes. Yes, hurry.
No, sorry, is it clear? Right now, next also you have to know something called payment. Okay, payment you have to know how you are going to make the payment to the vendor. Payment to vendor. So in SAP, you have two format. One is known as a print format. One is known as a electronic format. Okay, so meaning that print means like say prints mean like check. You can make the payment via check, or electronic means electronic means you can make the payment like uh, you can do the RTGS. In our scenario you can do IMPS transfer. Okay, electronic means transfer. You can do NEFT, you can do ACH. Okay, all these are known as a electronics form of payment to the vendor. Electronic forms of the payment. Is it clear? So these are the way you can make the payment to the vendor. Is it clear or not?
Yes, hurry.
Pallav, is it clear?
Yes, sir.
No, no doubt na up to here.
Yes, sir.
Okay. Now, these are let's say some very few things I have noted as a part of the consultant. Now, what users, what is user is more concerned about the AP. So for user important point is from the user point of view. Okay, from user point of view. End user, the accountant who is going to work in AP, for him, okay, important point is due invoices. He has to know which are the invoices due. Okay, for him, which are the invoices due. It is also known as a aging. Okay, invoice aging report is very important for him. Invoice aging report. Aging report means which invoices are due and which date, or you can put the days cap also, 0 to 10 days how many invoices are due. Okay, 10 to 20, 10 to 30 days how many invoices are due, 30 to 90 days how many invoices are due. That is known as a aging report. So for user, he is more concerned about the he is more concerned about the aging report. Okay, then there is something called parked invoice. Okay, so parked part, you I have already told you, parking the invoice. So he has to also know how many invoices are parked. He has to review, or his manager should review, and then they have to do the posting. This is also his point of concern from the user point of view. Then blocked invoices. How many invoices are blocked invoices? Okay, he has to also take care of the blocked invoices. How? He has to also think about the blocked invoices. Then cash discount utilization. As a smart user, he has to also think which invoices to pay on time so that he can get the maximum cash discount from the vendors. Okay, if you make the payment right invoices at right time, then you will get the cash discount also from the vendor. So this is very important from the user point of view, to know which invoices to pay, which invoices to not to pay, so that you should also avoid the any kind of late penalty from the vendor. At the same time, user should also think to make on time so that they can get the maximum cash discount from the vendor. Then any vendor with vendor with debit balances. See, generally when you purchase anything from the vendor, vendor journal entry, let's say here, when you purchase anything from the vendor, generally purchase account debit to vendor account credit. This is the journal entry, right? Correct, na?
Yes,
Aruna,
sir.
generally, right? Vendor, supplier, creditors,
Yes, Hari. Yes.
the credit, right? So see, your vendor is always in the credit. So you'll have generally vendor will have the credit balance, right? Our
Right.
account payable will have generally credit balance.
Credit
So
balance.
if any vendor is having the debit balance, it means that you are supposed to get the money from him. Okay, you're getting, na?
Yes. Yes.
You are supposed to get the money from the vendor. Either you have already made the down payment, so follow up for the delivery. If
Right.
not, any additional debit balance is there with the vendor, then user should focus why vendor had the debit balance. He has to follow up either to get the payment from the vendor. If he has made the advance payment, he has to follow up for the uh, delivery of the uh, products. Okay, so these are
Right.
the some point user should also focus in the in the account payable. So let me write here this point, that account payable will have generally account payable will have generally negative balance. Okay, negative or credit balance.